This is now my very first month getting back into option selling after taking about a year, almost 2-year break now. I'm going to go ahead and be doing these breakdowns every month as a log for myself and just as a way to make sure that I'm really tracking my results and managing my portfolio as actively as I should. So please do not take any of this as advice or think I'm trying to give you any trading ideas. This is really just a log for me to see if what I'm doing actually works over time and ideally out-earns what I could just get holding the S&P 500. Because if it can't, there's not a whole lot of use of it outside of just love of the game, just the love of option selling, I guess. But there's definitely a lot I'd like to get through in this video, but for those of you who just wanted to know what I collected in income over the month of January, that would be exactly $5,151.20. That also includes the cost of commissions and some rolling trades, which actually hopefully end up being profitable for the month of February. But that's what I made for this month, about $5,100. Now, for those of you who are actually interested in what trades I put on and how I plan to trade for this test over the next year, I will be covering all of that for the rest of this video. And for those of you who can't tell already, I use Thinkorswim for pretty much all of my trading. So here on this page, you can see a list of all of my current positions, everything I currently have on right now. So looking down here at all of the options positions, you can see that about half of them are currently working against me with this recent drop in the semiconductor space. But they're all still out of the money, so they'll hopefully remain so, and we'll start seeing a lot of these go back into the green over the next few days, couple weeks, whatever it might be. Now, as for my trading strategy, what I plan on doing at least for about a year, and we'll see if I continue that or if I try to shake things up a little bit, it's essentially just a modified version of the Tastytrade approach, and modified in the sense that I like to remain long the market. Since over time I generally think the market goes up, I'd like to be long the market as a whole to a certain degree, but still generate the bulk of my profits from time decay. So what I'm doing, and what I'd like to essentially test for at least a year, and then make some tweaks as I go, is to mainly stick to selling naked put options. I'm also going to be combining this with some short verticals, iron condors, jade lizards, and just see if the strategy can actually beat the S&P consistently. For now, I am going to be sticking with those stocks that I generally wouldn't mind owning, hopefully are already trading at depressed values, at least compared to the overall market, have higher implied volatility, ideally an IV rank greater than 30, and then the options that I want to trade on those stocks, I'm going to try and stick to about 45 days out in time, at least around that time frame if I can. Within that time frame, I'd like to stick to around a 20 delta. So for example, in this case, not seeing quite far enough out, but if we were to pull up, let's say Nvidia in this case, if I was going to be selling call options, you can see down here around the 20 delta would be the 160 calls, whereas on the put side can't even go quite enough out of the money here. So if I expand that a little bit, it looks like on Nvidia that'd be around the 115 puts in this case. And then in terms of managing them, I plan on closing the positions when it hits about a 50% profit or rolling at the 21-day mark. Now, to be honest, so far the hardest part is actually sticking to that plan to manage at 21 days. A lot of my positions for the month of February, you can see down here, have earnings. And that means if I hold through those earnings, a huge portion of the remaining time value is going to be sucked out of that contract right away. So it's a little hard for me to stick to this rule. I've been going over that 21-day mark that I set for myself, but I really am trying to do my best to stick as closely to these rules as I possibly can. But now that you have a rough idea, at least just a vague notion of what I'm trying to do in this account or kind of the strategies that I'm employing, let's go ahead and go through the trades for the month of January. And since I have an account at Schwab, I'm going to head over to the Schwab website. And within here, they have a nice little page under the Accounts tab called Realized Gains and Losses. This page does a much better job at breaking down my performance for a month-by-month basis versus the Thinkorswim platform. I think Thinkorswim is great for trading and managing my actual positions and managing risk, but I find it pretty much impossible to actually track my historical performance within there, so we're going to head over to Schwab for right now. Here within this Realized Gain Loss page, the very first thing I'm going to do is come up here and actually select the account that I've been trading in. In this case, it's the individual account down here below. I can then select a custom date range. So right here, I'm going to go ahead and select January 1st of 2025 out to January 31st of 2025, so I can capture the full month. And now looking down here below, you can see a breakdown of my overall performance for this month right here. That includes a total of $6,748 in gains, but also a $1,597 in total losses. Which honestly, after we break down those trades, I don't even know if I would count those as actual losses quite yet. Most of them are either going to be short puts that I rolled out further in time and then down and out of the money, or call options that, again, the stock moved up, I went in the money, so I rolled them out in time. So hopefully I actually make that money back for the month of February or maybe the month of March. But again, we can see if we combine both of those numbers, that left me with a net gain of $5,151.20. You can also see if I scroll down a bit, it actually breaks down each one of these trades so we can see exactly when I closed it, exactly how much money I made or lost. But for these videos, I'm actually going to do a little bit of plugging for my own app since it's the entire reason I haven't been doing much on this channel for the last year or so. So I'm actually going to be tracking and analyzing all of these trades within my TraderLog app. So this right here is the application. You can see all of my previous trades that have already got inserted in here. But since I do not have the trades for January quite yet, I'm going to first start by heading back over to the Thinkorswim platform. I'm then going to come up here to the account statement page, which if you're not used to Thinkorswim or not familiar with it so much, this is basically the historical view of the account. And what I need to do first is come up here to the top where it specifies how far back I'm looking, and I need to first specify the date range. So in this case, January 1st to January 31st. And the only reason I'm doing just the month of January is because I've already inserted all of the other trades in here already, and I just now need to insert my trades from January 1st to January 31st. So now with that set, I'll go ahead and click away. You can see all the trade history right here, and now for me to export it, because that's what I need to do to upload it to my app right now, is come back up here to the upper right-hand corner where this little menu icon is at, and then come down below and export it to a file. Now, I'm not actually going to show this part on screen, but all it does is it saves it as a file on your computer, and then we can access that file from the app later on. So in my case, I did save it to my folder earlier, so I'm going to head back over to the TraderLog app. And now in order to add those trades, we'll simply come up here to New Trade in the upper right-hand corner. Instead of adding these trades individually, manually, one by one, I'm going to select Upload a File. I'm going to come down below and specify the brokerage that I'm putting it in and the account that I want those trades inserted in. And then I just need to select Upload a File and then find that file that we just exported and then save and submit. Now I kind of skipped past finding that file, but right here you can see I just selected it. It's the file called 2025 for January 30th. And now to upload all those trades, I'll just hit Save and Submit. So now we've got all the trades inserted, and I will have this done already on all of the future videos I do for this, so you don't have to watch me do it every single time. But now that we have all the trades in here, you can see my overall performance right up here at the top. And right now, because I don't have a date range selected, these are all the trades I've inserted. So to filter it just for the month of January, we're going to come over here to the date range in the upper right. And then down here below, I'm just going to select last month. So now with only January selected, if you look up here at the top, you can see the total P&L right now currently says $5,228 for the month of January. And if you remember back, that is a little bit higher than I think it was around $5,150 that the Schwab website showed us. And that's only because this right here does not include commissions. That's only because TOS doesn't include the commissions in the actual trade lines for whatever reason. So I'm probably going to have to work on something to auto add a preset commission if it's missing from the broker. But just keep that in the back of your mind. It was about $75 or so in commissions that I paid across all of these trades. And over here on the right, you can see I had a win rate of 92% across 50 trades. 46 of them were winners, 4 of them were losers. I had an average win-loss of 0.47, with my average win at $139 and my average loss at $297. Now that doesn't sound the greatest, but it's not too surprising that with such a high win rate, when I do lose, it does end up being about double what my average gain is. And obviously in this case, it was still incredibly profitable, right? I still made over $5,200, maybe a little bit shy of that for the month of January. So even though I'm losing about double what I make on my winning trades, I only lost 4 out of 50 trades, so it still was incredibly profitable. You can also see over here on a positive side, my profit factor was 5.4, which essentially just means that for every dollar that I lost in my losing trades, I made about $5.40 on my winning trades. Now, since I've done such a poor job of tracking this in the past, I'm not really sure yet if this is even a sustainable number or if I'm going to start to see that drop as I move forward. And when we eventually finally see a bear market, I would definitely be interested to see what this ends up being, like what a good average target would be. If we come over here and go through my key stats, you can again see right here I had a total of 50 trades for the month of January. My win-loss ratio was 11.5, meaning for every losing trade that I have 11.5 winning trades. And obviously that sounds great, but again, it's not too surprising with the strategy that I'm using. Since I am selling pretty far out of the money options with a delta of around 20, I should have a little higher than an 80% probability of profit over time, with far more winning trades than losing trades. The real risk of this strategy is that my losers, despite having way fewer of them, could far outweigh the gains that I made on those winning trades. Now clearly that was not the case for January with over $5,000 in profit, but let's see how that goes over the next few years. Below that, we've already covered the average win, the average loss, and the profit factor. But right down here below, you can also see my average trade duration was 13 days, 17 hours. So on average, I've been closing my trades around 14 days after putting them on. Now, if I've actually been sticking to that expiration that I said, so in my case, I said I typically go out about 45 days out in time, that means that I've been closing them around the 30-day mark, and I haven't needed to wait all the way to that 21-day mark to roll them out. So it looks like for the most part, I hit that 50% profit target on average after about only 2 weeks, which is pretty nice to know. To the right of my key stats, I can also see each of those trades laid out right here on my calendar. So you can see here I closed 5 trades in total for the 2nd of January, making $528 on the 2nd. If we wanted to break that down, I could always click on it and see each one of the trades that I did. In this case, these were all short puts that I closed. You can see up here the average duration for these 5 trades was, again, roughly the same as the average across the board, just over 13 days in this case. Looks like an average win of about $105 on each of those trades, so pretty good. And I could always do the same on all of these other dates. It looks like the losing day, or the only losing day I had for the month of January, was the 13th. Looks like I lost $351. And actually, we'll go through this, but this was actually a rolling trade. So I did realize a loss for January, but I actually rolled this put out and down. And I think already for the month of February, I've already closed this for a profit. So even though it shows up as a losing trade for January, which it was technically, I've actually recouped all of this loss and made a profit for February. Now, besides that, if we go ahead and click away here, we can see the strategies that I employed for January. The best performing one was a bear call spread, had a 72% return overall. Looks like my worst performing strategy were the short calls, which I lost 46% on. Not too surprising since I think we had a nice little bull run on everything that I sold calls against, so I think I'm in the money on all those for right now. But then right below it, we can see the total I made by strategy. So I made $56.99 on the short puts, lost $635 overall on the short calls that I did, made $54 on a bear call spread. I think I only did one for the month of January, and another $110 on a bull put spread. Again, I think I only did one. I think that was on Broadcom. But here we can see a breakdown of everything that I did. You can also see a little chart over here on the right showing me my daily P&L, day by day, just what days made me money, what days lost me money. I kind of already saw that with the calendar, but it's nice to see it here as well. You can also see a breakdown of my performance by strategy. And again, since we're filtering only for the month of January, this is all I did for this month. We can also break it down by percentage returns too, if that makes it a little bit easier. See what sticks out as the highest return on investment. Below that, I've also got a breakdown of which stocks I did trade on, which ones were the largest portion of my portfolio. In this case, for the most part, it was kind of split evenly amongst all these stocks. I don't really see anything as too big of an outlier. Qualcomm was a little bit higher for the month of January. Looks like I had 3 trades overall, $609 in profit. Next biggest might have been, in this case, looks like Micron, another $657 in profit on Micron across 5 trades. To the right of that, these are all of my open positions that I currently have, which are quite a few. And again, since we're only filtering by January, you can only see right now my monthly returns for January. Looks like $5,228 in profit with a 92% win rate. Now, if we want to break those trades down a little bit further, we're going to come over here to the journal over here on the left-hand side. Here we can see the same information up here at the top, but now down here below, we can see a breakdown of all of those trades that I closed this month. And actually, it's all trades, so I'm going to come up here and only show closed positions. I want to make sure I don't include any of the open ones that I still got going on. Let's also go ahead and sort these from oldest to newest. And if you look here, I know I'm sorting by open date right now, and you can see December 4th here, and you're like, why does it show a trade from December if we're looking at January? And remember, that's just because I'm looking at all the trades that I closed for the month of January. So in this example, you can see I sold, what was this? A short put. I sold 2, and I collected $1.08 per contract. Looks like I closed it for 47 cents. It was actually the 35 strike puts, expiring the, looks like 17th of January, and I made a total of $122. Now we could go through each of these one by one, but they're pretty much all short puts like we saw before. Again, trying to stick to about 45 days out in time, sticking to that 20 delta, and then doing my best to close around that 50% profit mark. You can obviously see over here, I let them run a little bit longer. You can see this P&L percent. This one was closed 56% profit, 65% profit, 51, 64. So obviously I let some of these run a little bit longer than what I stated my original goal was. But if we focus on some of these losers actually, because those are probably the more important ones to focus on. Right here you can see this one, actually it's the largest loss in the account right now. Looks like these were short calls that I sold against Chewy, and I actually have 300 shares of Chewy in my account right now. You can see I originally sold these for 79 cents, but Chewy actually went up a decent amount right after I sold these, and you can see I had to buy them back for $2.36 a piece. So in that case, it looks like I lost $471. But what this doesn't show right now is that I actually rolled them out in time and I actually moved it up $1. Actually, looking here, I originally sold the 34s. I actually moved them up to 36, I believe. So I actually moved it up $2 and collected a little bit more premium. So hopefully for the month of February, I actually make a little bit of money, at least recoup this loss that I incurred, and ideally stay out of the money because I am quite a bit down on the Chewy shares that I have. So I'm not sure I necessarily want to get called away at 36. But this was a rolling trade right here. Same goes for IWM. I actually mentioned that earlier. This one actually has already turned around for me. I did originally roll this back down and out. I moved it from the 220 strike down to the 215, so I think I moved it down about 5 points. And again, I think I pulled in another 50 cents in premium for doing that. And I've already had the chance to close this out for a profit, so I've made all this $350 back and then some. But we won't see that until the month of February here. Now, the same thing goes for Amazon and Rocket, actually. I also rolled these, but Amazon, I'm still pretty deep in the money on. You can see right here, I've got the 215s, but I rolled those up to the 220 strike, I believe. So I'm still like 10 points in the money on Amazon, but we're going to try again next month to see if I can keep rolling it up. And since I do like Amazon, I'm comfortable holding those shares, so I'd ideally not like to get assigned if I don't have to. So I'm going to try and roll that up, but worst case scenario, I do get my shares called away at 225, and then I'll probably start selling even more puts against them. Now we could go through all of these. There are a lot. Remember, I did 50 different trades, most of which are winning trades. You can see most of them were closed around the 50% mark, maybe a little bit higher actually. And we could also come down here and go to my next page. More of the same. Actually, these are all winning trades, so that's nice to see. Here we can see one of the non-short puts that I did. Looks like I did a bull put spread on Coinbase. Looks like I sold the 255 by 245 put spread, made $110 on that one. You can also see up here I did something similar on Broadcom, but I must have thought that it was a little high at this price because I sold a bear call spread. You can see this one was not 45 days out. It looks like I opened it on January 3rd, expiring February 7th, so it wasn't quite 45 days, maybe a little close to that. But we can see I did make a 72.97% profit on that bear call spread. Almost everything else in here though, short puts, and then those covered calls that you saw earlier. Now breaking that down in a report format, because even though it was nice what we saw earlier, I do want to break down these metrics even further. So let's come over here to the reports page. This is going to show us a lot of the same up here at the top. So total number of trades, total winning trades, losing trades. We can see my average days till expiration was just over 34. So obviously I did not stick to that 45-day mark like I was saying originally. Here we do see a lot of the same from the previous pages, but it does give you a little more info. So again, average trade duration, a little over 13 days. We can see the average win duration, actually a little bit less, just over 12 days. Now my average loss duration, you can see I hold on to those longer than I said I would. You can see my average loss duration, I hold on to those trades for just over 28 days before either closing them or rolling them. So clearly I do hold on to them longer if I am taking a loss, which makes sense. You can see here on the trades that I do win on, I put them on about 35 days till expiration. On the trades that I lose on, even though remember this isn't a whole lot of data to go off of quite yet, I've only done this for a month, so I'm not going to put too much weight into these numbers quite yet. But right here you can see when I do lose, it looks like my average days till expiration is a little bit less, only 32 days. My average daily P&L, $326. The largest day gain was just shy of $1,000. Largest day loss, $350. You can see the largest profit I took on any of my trades was $561, while my largest loss was $471. That was actually the rolling trade for, I believe, the covered calls on Chewy though. And because we're only looking at the month of January, of course, January is both our best month and our worst month. Now what's also cool is we can also break down our performance by strategy down here. So again, we can see our performance by the short put strategy, short calls, bear call spread, bull put spread. We can see the max gain loss by strategy. It kind of looks weird since there are only 4 strategies that we employed here, but it's nice to see. We can also see down here below in the table, we can see of my trades that I did, 45 of them were short puts, 3 of them were short calls, all of them were covered calls by the way. You can also see I did 1 bear call spread, 1 bull put spread. And then of course a breakdown of the P&L, the win rate by strategy. So in this case, because I only did 1 bear call spread and 1 bull put spread, I had a 100% win rate on those. My short puts only had a 95% win rate, and my short calls, and there were only 3, so I can't put too much weight on this, but in this case only had a 33% win rate. And then again, over here on the right, we can see my average duration. So how long I was in each of these trades. And we can see for the short puts, I'm in about 13 days, technically a little less. In my short calls, I hold on to those a lot longer. I was in them for over 31 days on average. And then in the case of my bear call spread, I was in for 23 days, so over double, well, actually not over double, a little less than double the duration for the short puts. And somehow this bull put spread, I was only in for 4.9 days. We can also break it down by duration. I know we've already talked about this a little bit, but we can break down our strategies by the duration or the time that I held the position. And in this case, I think I widened these out too much. I'll probably break it down just day by day, because right now it groups all of my trades between 2 and 5 days, which I had 10 of those. I had 13 trades that I held for 5 to 10 days. I had 23 trades that I held somewhere between 10 and 30 days, which is way too broad. I would probably want to break that down much further. And I had 4 trades that I held somewhere between 30 to 60 days. Again, we can see what the total P&L was based on how long I held those trades, what the win rate was, what the average P&L was, and what the overall ROI was. We can then do the same for days until expiration if I wanted to quickly see which trades performed the best based on basically how far out in time I went to sell those. And remember, I told you I want to go about 45 days out, but I want to sprinkle in some other stuff too to see really what performs the best over time. And like I did on the previous one, I'll probably want these to be a little bit more narrow because right now you can see I did 5 total trades that were expiring somewhere between 7 and 21 days when I put them on. 42 of my trades were between 21 and 45 days. And then 3 trades that I did were over 45 days out in time, but somewhere between 45 to 90 days out. Just like before, we can also see the total P&L based on that days till expiration that I picked, the win rate, the average P&L, and the ROI. Now finally, I could also do the same thing for spread width, but remember I only had 2 spreads for this month, so it's not a whole lot of data to go off of. But right here you can see I did one spread that was $5 wide, I did another that was $10 wide. Obviously I made more money on the wider spread, they both had 100% win rate. But we can also see over here, the ROI was actually higher on that $5 wide spread. So I made 72.97% on it because I was risking a whole lot less for doing it, even though I made less money overall. Technically, it probably would have been better for me to like double up on this one versus going 10 points wide, but it's nice to see over here exactly how I did based on the spread width. And hopefully over time, I get a lot more data where I can maybe crunch the numbers a little bit better on this to see what is more ideal for me. $5 wide, $10 wide, what works out best. But again, this is going to be a breakdown for the month of January. I know it was a lot. That was a lot to go over. But hopefully that gives some of you out there an idea of exactly how this strategy works. And then hopefully over time we can figure out if it actually ends up being profitable or, more importantly, out returns the S&P. Because obviously just putting all my money in the S&P is a whole lot easier than managing all these options every day and rolling them and hedging against risk and whatnot. So definitely stick around if this is something that interests you. I'll be doing these every month, breaking down exactly how I did month by month. And if you do have any questions or things that you'd like to go over, please let me know down below and I'll do my best to answer them. And if you're interested in learning anything else, I make a whole lot of tutorial videos on different platforms. So go ahead and check out this video if you want to learn more. Otherwise, I'll see you guys next month.